Our sponsor for this session is GR Energy Services, completion, production, and water management. Please visit their page in our Sponsor Showcase tab.
Hi, I'm Steve Toon, editor of Oil and Gas Investor Magazine. I'm joined here today with Tom Petrie, founder and chairman of Denver-based Petrie Partners. The old phrase, "we live in interesting times," has never been as appropriate as it is today, particularly for the oil and gas space. We're in the early days of a new presidency with a bias against fossil fuels. The COVID demand destruction persists as cases are rising in various parts of the world. OPEC and Russia still exert an uneasy push and pull on global supplies. And lo and behold, international gas markets are starting to look pretty good. We are fortunate that Tom studies the nuances of the macro and is here today to shed some light on what American producers can expect from this volatile landscape. So, Tom.
Thanks, Steve. It's a pleasure to be here with you. I think this is my third or fourth participation in some of the hard virtual conferences. And this is a particularly important one because it's so timely relative to the installation, as you point out, of the new administration. What I want to share with you today is some thoughts about the markets and money, the bulls, the bears, and the undecideds that make up people who are voting with their feet and with their dollars in what is still a COVID-19 driven world. And to do that, let's go to the topics, which is the next slide. What I'm going to do is talk about the E&P sector relative performance, then go to the impact of COVID-19 on oil supply demand. That was a big shock, a little less than a year ago. And then we've got the historical petroleum price trends. There's some trends in there that I want to bring to your attention because they augur well for where we go from here. Then I'm going to talk about capital rationing and the flow of new capital into the sector. What are the requirements that are likely to be out there for that to happen? And then talk about self-correcting forces that are now at work in the pricing dynamics globally, some updated geopolitical realities, and conclude with the case for natural gas, which I think is particularly compelling to deal with some of the challenges that I think are coming up. And then I'll wrap up with some concluding observations, and we can open it up for Q&A. This is a really interesting diagram because what it captures on the horizontal axis is what we lived through in the last 12 months for various sectors performing relative to other sectors in the marketplace. And what you can see that red dot of E&P was way over to the left because it was the most adversely impacted single sector making up the other sectors in the market compared to making up the other sectors in the market. And then on the vertical scale, what we have is what's happened in the last 2 months. So since the election and the knowledge that despite the controversies, there was going to be a change of policy and a change of administrations, we see E&P coming back. And that's kind of interesting because it's not necessarily the case that this industry is going to be a favored choice of the new administration, but the market kind of is concluding that it's going to be so important that we should give it the benefit of the doubt. And that's what they've been doing the last several weeks, for sure. Let's look now at the impact that occurred just about a year ago when the coronavirus hit. We knew about it in January, February. There were reports, and they became more and more confirmed in March. We began to realize, look, this is going to have an adverse impact on the demand for oil in the world. And that's what this chart shows. We can really see what a dip occurred in that dark blue line. And as a result of that, the decline in demand was so sharp that an involuntary build in inventories of oil occurred, and that created downward price pressure, really big. And that's what you see in the yellow bars below that. Both in the first quarter, it built up, and it built up even further in the second quarter. Then we started to get a V-shaped recovery, and we were getting back to something more like the old normal, but we haven't gotten there yet. That dotted line at the top of the page was world consumption as it was going on just before the coronavirus hit, a little over 100 million barrels a day. But at the low point, we were down by 15, 16, 17 million barrels.